welcome to Meadows Investment Forum. My name is Chen Lin. I write a newsletter called What's Chen Buying and What's Chen Selling. So this is my disclaimer, and you can read it as your pleasure. So there's so much talk about this coronavirus. So I want to first draw the big picture for everybody. Okay, I think there's a lot of misinformation in the media. So for you, for the investor, you need to have a clear head to see what really happened and have some idea of what's the impact to the economy and the society going forward. So there are a lot of research from China. I pick one from Stanford University, and you can Google that person, Michael Levis. He probably have a more updated one. This was as of last weekend. So you can see the worldwide, okay, the fatality rate of the coronavirus, or the so-called whatever their new name, Lovis 19 or something. So that is in that province of China, in the Hubei province of China, the fatality rate is almost 4%, it's over 3%. Okay, outside that province, the China, rest of the world, is less than 1%. You can see the fatality rate tip up a little bit. That's usually due to the Iran, so they have a very high fatality rate, but I think the infected population was much more underreported because it doesn't make sense. They have so many deaths, but so few people infected. As a matter of fact, even their vice president was infected. So this patient population was way underreported in Iran. So that's why you see the death rate tip up a little bit. But in reality, you can see it's about a little bit over 0.5%. So it's not the end of the world, okay? I was talking to my doctor. My doctor told me, oh, it's 2% death rate, 3%, nurse says 3%. Yeah, it's true. If you average the Hubei province, if you average out with those people, it is 3%. But if you exclude that area, that where it's in complete lockdown, nobody can come out, nobody can go in, the fatality rate is about 0.5%. And second picture, you can get it, see anywhere on the internet, you can find the same data. What it shows is there is a dramatic drop of the death rate. Each person, how many people die, right? You can count. In the past, this is as of yesterday. So you can see the death rate go way down. Used to be about 100 person die per day, mostly in China. And recently, there's a surge of that. That's actually Iran and other areas. In China, actually, it dropped from about 100, over 100 just a week ago, dropped to about 30 to 40 in the past week. Because there's a lot of improvement in the treatment. Okay, one area of the treatment is that there's a lot of cured patients in China. So if you cure from the coronavirus, you have antibody. So they take the blood of the cured patient and gave to those very sick ones. That's one of those. And then there's a lot of autopsy was performed, a lot of autopsy. So they figure out why the patient died. It's different than SARS. SARS, your lung just collapse, become some kind of non-functional. They found out actually there's a lot, their liquid was generated. So if you put on less respirator, actually push more liquid, it potentially push more liquid in, you drown on your own liquid. So actually there's a more better treatment to suck the liquid out too. So I mean, I'm not saying it's controlled. I'm just telling you the reality in the coronavirus. The treatment is getting much better. The death rate is about 0.5%. If you believe that the chart is going down from China, the death rate from last week versus the week before is dropped by 2/3. So if it's the fatality rate can go down even further, it would be close to 2.2, 2.3%. Okay, I don't agree with President Trump most of the time, but I do agree with him that this looks like it's more like a flu. It's a severe flu. Flu's fatality rate is about 0.1, sometimes even higher, maybe 0.2. This is maybe a couple times higher than that. Okay, but it's not the end of the world. There will be more news coming out. But as an investor, you need to think ahead. Okay, I already saw some people post on the internet say, "Oh, Mondays, let's sell everything." That's average investor, and then you guys are the smart investor, and then with the smart money, you know what to do. So that's what I just added yesterday about the coronavirus. So I'll give you a big picture, so you have some perspective on what is really going on. There's a lot of media, there are a lot of misinformation, and some may be political motivated. I do not know, but there are just a lot of people telling me, especially in the United States, the number is way overblown, okay? So it is true, the fatality rate is 2-3%, but you have to add all the people in the epicenter. But outside that, it's much, much lower than that. Okay, so let's go down to investment. So my investment philosophy is to try basically increase my portfolio, right? My family, my subscribers, and I watch the junior market in the past decades. My feeling is just too much, pump and dump. There are a lot of companies, they really don't have any good asset. They just promote. And then I saw some company they gave all their money to promoters, just promote the story, and then they pump, and then stock collapse immediately afterwards. And there's a lot of people need to be very careful. There are a lot of zero-sum game out of that. And there are always, some investors always think, okay, I'm smart money, I can always get out earlier than everybody else. So my philosophy is really we're trying to make money the old-fashioned way, right? We want to try to create value and see where value is, looking for cash flow. We're looking for real asset. So this is, again, the in general idea, okay? So a lot of people just want to hold one stock and then hit a home run, that's it. But it's very different. Even you have stock up many-fold, you still have to calculate what's the risk of going up and going down, right? You always calculate the risk-reward, and then you want to be the house instead of a gambler in Vegas. So that's the idea. And then we want to study the project. We do a lot of site visits, have a lot of knowledge. And in general, I want to have a more winner than loser. That's what, that's investment in general. So that's actually this slide. I want to talk a little bit more, spend more time on that. So I invest in many different sectors. Okay, I have metal, mostly precious metal. I have biotech, I have energy. So recently, the volatility of this market actually proved again that if you have a multiple sector, you can, that's very, very crucial for me, at least, for hopefully for my subscribers in this very violent market, right? So in general, I have a very good success in the past few months, mostly in biotech. So I have many stocks, about 5 of those already more than triple. So I sold most of them. So I have a lot of dry powder. And I'm looking for opportunity right now. So we can discuss a little bit later about the gold market. So, but I see clearly last week the biotech market already bottom. So even Friday, the biotech index was still up. Okay, so you can look at the different market, different sector. So I can sit on that biotech and waiting for gold to turn around. I think gold will turn around, but right now nobody knows where exactly the bottom is. I didn't hedge except 2008, and this one I feel like a mini 2008. Okay, I don't feel exactly like 2008 because 2008 the interest was very different. The Fed action was not very clear, so there's a considerable fear of the market. And today, we know Fed going to do QE, going to cut interest rate. We know what's coming. And so the market was overvalued. So this is a good correction. So in turn, I feel this is a good buying opportunity here. So again, a lot of times you need to look at the big picture. So this is my prediction in November 15th. That was the last Metal Investment Forum, right? So at that time, my prediction was there will be likely a phase one deal between US, China, between the mid-December. And then phase two deal, it's very unlikely. That's exactly the slide I used. And I see slowdown. Of course, I didn't foresee the coronavirus. And then I see potentially Fed cut. So at that time, I was able to wait for the US-China, the phase one deal. I thought gold may go down. It go down somehow, didn't go down that much. But, after the deal, you buy gold, right? Buy gold around December, and then when they go up, take profit, right? So that's one of the investment idea I had, and they so far works pretty well. That's my last presentation. So this is what I see. Okay, coronavirus. I don't see a complete global pandemic, even though you feel like a pandemic. Okay, I think the maximum fear probably is in the next 2 months. Japan may cancel its Olympic. That's possible. Even the government wouldn't admit. The government, every time they deny that, I think they may be forced to cancel that. And then that could be the maximum fear, okay? So there's a different way. It could be maximum fear, could be next week, or may US cancel all the plane or something, restrict travel everywhere. It's possible. But and also another thing could be cancel the Tokyo Olympic. It never happened since Second World War, right? So that will send the shockwave. I'm sure media will be all over that. That's the end of the war. That could be a great buying opportunity. And then the second, so I wrote this like a week ago. So the situation changed so much. At that time, I was thinking, oh, this year should be sell in May and walk away year. But now it's already done. It's in February, sold in February. So this development is so much faster than you can think. That was my strategy was thinking in February. But but I see the second half will be a lot of uncertainty. But right now, everything got pushed forward. So this is something I want to show you. Okay, this is a chart. I put it on by Thursday. Okay, this is last Thursday's chart. That's gold. Top is gold. Bottom is silver. Top is platinum. Bottom is palladium, right? So early last week, I first put out my newsletter as I sold everything. I sold the silver, I sold platinum. Okay, by Thursday, I feel so bad. That's when I saw those charts. I feel so bad as I sell gold, okay, because I think gold will go down hard. I remember I was calling my good friend Jay Taylor. I said, hey, Friday may test the 1600. Guess what? It went down to 1550. So from trader, if you're a trader, from those charts, why do you think gold and silver will go down on Friday? If you see this chart, this is Thursday, as is last Thursday. Okay, top is gold, bottom is silver, top is platinum, bottom is palladium. Anyone has any answer? When you see this chart? Keep shorting. No, I'm just saying this is a Thursday. We're standing here on Thursday. This is a chart I saw. And then my prediction was the gold will get hit hard on Friday. Anybody had just a trader from the trader's hat? Platinum's down. What's going up? What's going up? Palladium's going up, exactly. That's canary in the coal mine. Why palladium's going up? China's automobile industry is completely freeze. China's factory is stopped making automobile, making cars. They're making masks. there will be a huge amount of mass coming from China because the car manufacturers stopped making car already. Okay, there's no demand, zero demand. They're making masks, but why palladium going up? Why palladium? It doesn't make sense. The only reason I saw that, my explanation was because the hedge fund who were shorting palladium as a hedge and then long gold, long silver, long platinum, they got squeezed. They're forced to cover, to get rid of their position. Because it doesn't make, palladium collapsed on Friday, okay? But before on the Thursday, how can palladium surge? Well, all the other precious metal goes up. So I feel it really doesn't make sense. So something bad is about to happen, right? So we will see next week which fund going out of business or which fund get a huge redemption. That will be on Bloomberg and Rogers. But that was the canary of the gold mine to me, okay, because it's really counterintuitive. Doesn't make sense. With that kind of news from China, they stop automobile manufacture, and then probably with all these coronavirus in the U.S., in Canada, the demand will go down as well. So why palladium goes up, right? So that's make me feel very bad about the gold and silver. So that's why I gave the recommendation to sell gold on Thursday. Okay. So what I want to say is for gold, okay, for gold and silver gold miners, if you get a gold direction right, you almost right 90% of the time. Okay, it's most of the game. So I start buying a little bit back on Friday, a little bit gold mining, but most money I'm still buying is picking up is biotech, because biotech clearly bottomed last week. But I will come back and plan to come back on Monday to buy a little bit more gold. Okay, so gold and then gold miners, every miner is very different. So you should have a list of following. There's a lot of wonderful company out there you should talk to. You're the smart investor. You're still looking at in this market. So for my order, okay, I don't have that on my slide. You should first order. You're looking for probably a royalty company, because royalty company doesn't require any capital. They usually pay pretty good dividend. Right now, probably pay better than the treasury. And the downside is usually limited. Okay, so if you're scared, you're uncertainty, there's some company I have, Cisco, Sandstorm is very cheap. There's all these sort of royalty companies. They were hit very, very hard on Friday. I think those are probably the safest. And then you're looking for producer, especially producer who has hedge book for this year, right? So for them, this up and down doesn't make any difference. You can look for those. I bought a little bit of Goldfield. Goldfield has a hedge for this year, and next year they will be out of hedge. 2 million ounce gold producer. I think it's looking very good. So, and there's a lot of good junior company out there. And also here, so you can look. So you may not pick exactly bottom, that's what I learned, but you can gradually buy, especially the maximum fear. Okay, the announcement Tokyo canceled the Olympic, the announcement US restricts travel, maybe US do not allow to travel to Canada, that we cannot go back to the United States after this conference. Those moments usually is psychologically most difficult to buy, but this is the best time to buy. Okay, so that's what I'm talking about. Mostly for majors, for producer, for ETF, and royalty company. I think royalty company probably can start buying, especially dividend-paying royalty company. And for the junior, okay, junior for me, the junior, and everybody knows it's rather illiquid, okay? So it's a stock picker's market. So you need to do your research. Unlike the other portfolio I have, which is gold, ETF, future, and then gold major mining company, they don't have much liquidity. So you need to buy and hold, okay? If it go up a lot, you can sell some, cover your costs, and so on and so forth. So this without too much, I'm almost at 20 minutes mark. So I'll introduce five company I like, and then each company has their unique story. So will start with the Dunedin venture.